Hello and welcome to India Market Open. It's the last day of the week and there's lots of weekend cheer on D Street after a fantastic, eye-catching, eye-popping rally yesterday. FIs are back too. It looks, we're setting ourselves up for really new records, but, which you've already done. Yeah. But 23,500 inside, maybe not today, but at least in the near term from what analysts are saying.
Yesterday, when me and Tamanna were anchoring the closing show, we came 8 points adrift. And it was like a touch and go.
I was going to say the show yesterday turned into a reality TV kind of show.
It was like that, yes.
With, one of those amazing race things where you are distanced to 23,000. So that was exciting. But the big question, of course, is does it sustain? Do you see some profit booking coming in today? And that's what we're going to be discussing on the show. I'm going to go through the global cues straight up because we have a very special guest coming up at 8:15 who's going to give you perspective of what's happening in the world, FI view, etc. We want to pack a lot of it today. On the top of the show, it's going to be an exciting day. So global cues were not great overnight. The US sulking a bit, at least the Dow sulking a bit. Nvidia, the only silver lining over there. The Dow was down over 600 points overnight. Couple of factors there coming in. The Fed minutes, like we discussed yesterday, have not been very positive because, you have enough officials who are afraid of inflation being sticky. Some even talking about maybe having to tighten, etc. So that has spooked. Clutch of data, slew of data came in, economic data pointing to a strong economy. So then the case for a rate cut becomes dimmer. Suffice to say, if you pull up the indices yesterday, all three were down in the red with the Dow getting beaten the most. Nvidia, like I said, bucked the trend, up 9% after stellar numbers, but that's not going to be quite enough. So what is the economic data which is spooking at least global markets, the US markets? One is the jobless claims number, which came in at 2.15 lakh in May, 18th week versus estimates of 2.2 lakh. So slightly lesser. The jobless data was down. Meanwhile, you had services and manufacturing indicators which were higher than estimated. So you saw bond yields inch up slightly, 4.47% on the 10-year. Brent continues to trend lower. As we have seen, crude is generally lower, $81 a barrel for Brent. Asian markets, and let me pull that up as well, also in the red, actually hurting a fair bit, over 1% down on the Hang Seng and the Nikkei. Following cues from the US, perhaps. I'm going to just pull up the implied open very quickly and see how we are placed and what we're seeing. So we're seeing maybe an opening down in the red following global cues. Does our own domestic strength come in through the first half of trade today is what we're going to have to wait and see. But the big figure that the market was watching yesterday and all of us have been talking about since closing yesterday has been the fund flows. And I want to pull that up because FIIs turned buyers for only the second time in May. I think those numbers are flipped. Those numbers.
We're so used to reporting a sell figure on FIIs.
Our graphics team, our producers, so used to showing FIIs as a sell number. It's automatically gone to a red. It's green. So 4,671. Crores was the buy figure for FIIs. DIs also bought at 147 crores on May 23rd. So
this graph, Tamanna, says what you want to say.
Exactly. So 2 times in all of May is when they've bought. Now, could that have been part of the reason that you saw a bump up yesterday, possibly short covering as well as another big reason that you saw once things seemed to turn, and perhaps more cheer on bond deals today because banks are actually open versus yesterday.
Yeah, just before we go into that, and if you're wondering what this Nvidia rally has done for you as an Indian investor, some of the top Indian mutual funds do have a significant exposure to the chip maker. So just to take you through that, and if these mutual funds are on your portfolio, you're actually in the money and you could be smiling your way to the bank. Motilal Oswal has an exposure of 463 crores to Nvidia, followed by Mirai, which is 284 crores. Franklin Mutual Fund as well holds about 127 crores of their portfolio to Nvidia. And Kotak Mutual Fund is an exposure of 188 crores. So if you have any of these funds in your portfolio, guess what? This beautiful rally rally that we've seen on Nvidia would be reflecting on your earnings. I just thought we should mark that because we talk about this so much.
Yeah.
And it'd be interesting to know whether any of local investors are making money out of this.
That's a great
and
point.
They are.
Yeah, that's a great point that you do have an opportunity. But yes, so the FI flows is the big factor. I suppose, Niraj, the other big question is whether you're going to sustain, whether you're going to see some profit booking after the bump up yesterday. And in this conversation we had post the closing, one point that came out is that Nifty Sensex was in great shape. Relatively, the broader markets did not perform at the same pace.
Yeah.
So maybe people looking at their portfolio yesterday didn't feel the same cheer that they saw maybe on TV screens like ours.
Unless they had Adani Group or some of the PSU banks in their portfolios. But I think well summarized really. Just the point is that somehow Indian markets currently, even yesterday, right? Indian markets did their own thing. It was not that the global markets were rara, but because of this RBI move, Indian markets managed to do their own thing completely. And the momentum may sustain. Now, Tamanna makes a very important point. Could there be some bit of profit booking? A lot of traders trade for the week. The week is coming to a close. You take your money, go home. A new Monday, new trades. So all of that may happen. But over a period of next 6 days, is the momentum still set for the upside? I would reckon yes, because frankly, yesterday was the first hint of two things happening simultaneously. Some serious short covering and some serious global buying happening in tandem. We haven't seen both of those happening together. As the number showed, 4,600 crores of buying from the FI side. FI short covering, we've spoken about how it's been continuous for the last 3 or 4 days. The long short ratio has improved from 18% on the 18th of May to probably about 22 or 23% currently. So first hint of both of these things happening in tandem. This doesn't end in a jiffy, I would reckon. And if today the bond markets as they open up show yields dropping dramatically, it might well give a further leg up to the PSU bank sentiment and maybe to banks at large. So that's to be watched out for. And therefore, I think infra stocks and PSU banks remain the top draw along with select media stocks. You look at that space carefully, media by the way, viewers, and you see the delivery-based buying that is happening into some of those media names. You'll get a hint of what we're trying to say here. And by the way, speaking of delivery, just that point about yesterday, we saw some of these stocks gain so much. Look at, guys, the delivery-based buying that happened in some of these yesterday versus the 5-day averages. So Adani Enterprises and Adani Ports and L&T Infra, right? 18 lakh shares marked for delivery for Adani Enterprises versus a 5-day average of 11.58. Adani Ports double the volumes, 27 lakh shares marked for delivery. This is combined BSE NSE versus 13.61. L&T 21.29 versus 12.45. This is serious delivery-based buying if you look at the ticket sizes of these stocks. HDFC Bank, look at that number. 1.21 crore shares versus 97 crore shares. Even for a BOB or an IndusInd, some serious delivery-based buying relative to averages. In SBI's case, there was not as much of an uptick, and maybe which is why SBI probably didn't do as well as some of the others. But there were some long calls that came in for SBI on closing trade yesterday, so that's to be kept in mind as well. And guys, it's an interesting day of results too. NTPC, Hindalco, Hindustan Copper, a clutch of those names.
So just to add to your list, banks have done exceptionally well yesterday, and so was Auto. Auto saw buying to the tune of 2.5% versus the Nifty. And also what stood out is, and this could be a shade of FIs coming back, right? Yesterday's trade belonged to Nifty 50. It was up 1.7%. Broader markets clearly underperformed the benchmark. My only point to FIs coming back is Monday is a holiday on Wall Street.
Yeah.
So will they come out and go aggressive today? It looks slightly unlikely to me, only because they are going into a long weekend as well. And historically, we've seen that FI traders avoid taking aggressive positions on either sides ahead of a long weekend. So you want to keep that in mind. But if they do come back, private banks, that's a space you want to watch out for, is going to be in focus. And the frontline names, that's actually where FIs like to find a piece of their pie in the frontline names as compared to what DIs prefer, which is the broader markets. But quickly going into earnings, and for a change, I've got 3 fantastic earnings to report on. Fortis Healthcare, very strong numbers coming in from there. Their revenue is up 8.7%. Now, what I also interestingly got told this morning is for a hospital company as well, well, you have seasonality. So quarter 3 is a weak quarter because of festivals. Quarter 2 and quarter 4 turns out to be strong. We saw that for Metropolis, and now we're seeing it for Fortis as well. Fortis reported good set of earnings on top line, up nearly 8%. Net profit has been fantastic, coming at 203 crores versus 138 crores. Margins have also improved substantially to come in at 21.3 versus what we saw in the same quarter last year at 16.5%. In the management con call, they indicated that after the divestment of Malar, they would see margin uptake on EBITDA, and that's exactly how it's played out. Other expenses have also decreased for Fortis. So all that makes the company's reporting look actually pretty good. The counter could be one that you may see a gap up on, or you should rather see a gap up on in early trade this morning. Another standout was Interglobe Aviation, competing with the likes of international players. This one has actually reported a very strong set of earnings, especially given that it's come out of a loss exactly in the same quarter last year. Well, despite higher fuel prices, this one's reported good earnings. Revenues were up 26%. EBITDA was up 66%. Margins have also improved substantially at 23.3%, and net profit was up about 106% at 1,895 crores. Well, it's a significant turnaround from a loss which was over 300 crores in the previous fiscal year. This is also the 6th consecutive quarter driven by robust passenger demand despite rising fuel prices. Indigo owns or commands a market share of about 60% in the country. There's also talk about, in fact, they've talked about this, that they would be launching the business class segment, and that usually, I believe, is the rather profitable segment for an aviation company.
You know, I'm a bit mixed on the business class announcement, Samina, and there's an MS note this morning saying that that's the right way for them to go. But Indigo's complete positioning has been as an LCC, always as a low-cost carrier. Why are they now switching?
So, you know, if you look at
international long haul, how can you do without business class?
No, but they're going to do it on select routes
as well. But
everywhere. Yeah. International long haul, okay, fine. But the fact is that you know, you're building on the premiumization trend, which you're seeing across sectors, in a space where your passengers booking tickets are notorious for cost saving.
That's true.
And your big numbers are coming domestically. In terms of your volumes growing, it is still domestically. Yeah, but they want to get into the long haul space. Yeah, I agree.
Which is why I think that might be a good strategy. But
then you're competing with, say, an Emirates or an Air India as well. I don't know. It's an interesting move. They have to move somewhere. But business class has been, or, you know, catering to a premium domestic audience in aviation has been, I would say, a treacherous terrain for a lot of Indian airlines.
But having said that, I think with an aviation or an airline company, the most profitable segment is business class and premium economy. No, actually, first class is not as profitable from what I recently read. It's largely business and premium. Premium economy, of course, you pay a huge bump up for very little room that you're adding. So we'll wait and see. We'll try and get some more perspective on it.
The other thing about Indigo, though, is the loyalty program as well. For the longest time, so many people have said, why doesn't Indigo have a loyalty program? Now they finally have one. It might just spur a lot of people. Chalo, 1 ghanta delay hai, but mujhe points mil rahe hain, let me stick to Indigo.
Yeah, and I think the other thing that builds on Tamanna's point is they do have code sharing. So if that could be another reason why you'd want to do it. So if you're flying a route with, say, a Turkish Airlines, you will still land up flying economy because the option of business class is not available, right? On the code sharing. But that's a discussion we will
Indigo
talk to an expert about.
Rather, Morgan Stanley is positive, LRI is negative. LRI says, hey, we have a downside 3,500 target price. So it's all over the place.
It's all over the place. But the earnings have been fantastic, and they
no doubt.
are sitting on a huge cash balance of 34,000 crores. And I think that's eye-catching.
To consistently make money as an airline in India, which has been the graveyard of so many.
It's been compared to Emirates and Singapore Airlines. It said that its league is international players, not even Indian players. But very quickly, moving from there is Zagil Prepaid. Again, fantastic run on this company. They've been bagging orders back to back in the last 6 to 8 months. Profits, as expected, are higher by 153%. Revenues are also up 47%. Now, the only thing that could cap the rally in Zagil Prepaid is a very, very expensive valuations that this stock commands. But apart from that, very solid earnings from Indigo, from Fortis and Zagil Prepaid.
All right, very quickly, the 3 stocks I'm talking about, Honasa is the first one. Their revenues at 21% up, is slightly below what the street was expecting. Advertisement costs as percentage of revenue has steadily risen, but from what brokerages are saying this morning, there is a hope that margins will improve, and other expenses have also, of course, come down. The management is talking about double-digit growth for their key brand, which is Mama Earth. It's still, their biggest brand, and anticipates a revenue of 10 billion in 3 to 5 years for the Derma company, Dr. Shade 5 billion, and Aqualogica 5 billion. So what does MK say? Management guidance of more than 20% revenue CAGR is reassuring, whereas its near-term margin builds will have to be seen. So that is, one stock to watch. Honasa yesterday took a bit of a beating in a market which was otherwise quite buoyant. Bikaji Foods is the other one. Now this is I would say a yummy set of numbers. Now the snack market has anyway been in the focus, whether it's listed or unlisted, but Bikaji Foods has actually done well. Look at their net profit number, and that's the one that stands out. Nearly 200% up at 116 crores versus 39 crores. EBITDA has gone up robustly at 161 versus 62 crores. Margin bump up is massive, 26.2% versus 13.4%. Revenues have also gone up 32%. What has worked for them is a dip in their cost of raw materials, and if the market is really in a mood to reward good numbers, Bikaji is definitely a beneficiary of that. Very quickly, Vodafone company has clarified that they are in discussions with Ericsson and other network vendors for 5G network gears. You might see a bit of a bump up. Vodafone was up 4% yesterday. So
for Vodafone, that's large.
no, it is.
50 paisa movement on the stock.
No, but for Vodafone, it is large because, look what is being bet on. Again, coming back to what has happened yesterday, and I know we're going to talk about that in just a second. What is being bet on is that if you have policy continuity, then directionally you're going to see more of the same, and that works for Vodafone.
And we talked about this at the earnings, right? That they're already at rock bottom.
Yeah.
Where do you go from here? The only way to go is up, I guess, and that's what.
Yeah, it's showing. Okay, just before we go to Robert Sokin, quick three stocks from my end. JK Lakshmi Cement could be interesting. The revenues were down 4.4% at 781 versus estimated 1928, so that's a pickle. But margins at 18.9 versus 14.7, very strong performance there for a cement company to do that this quarter has been tough. So JK Lakshmi is in focus. PAT up 41% at 162 versus 143, so that stock could do well. I'll watch out for Bayer Crop Science on the negative side. Revenues were down 20%. Lower than estimate, margins at 12.2, lower than estimate, PAT down 39% at 96 crores, lower than estimate, could react negatively. And the flip side, something which has more certainty is Johnson Controls. Revenues up 40%. After a very weak quarter 3, quarter 4, very strong for Johnson Controls. Revenues up 40% at 772 ahead of estimates. Margins at 10.6% ahead of estimates. PAT at 49 crores versus a loss of 1 crores, way above estimates, could react positively. But there are more stocks, of course, and we'll talk about them during the course of the day. But let's get in Robert Sokin, senior global economist at Citi Research, who joins in right now with his thoughts around the global markets, maybe a view on India as well. Robert, great having you. Thanks for taking the time out. Good seeing you on NDTV Profit again. While India is doing its own thing, just a small question around whether this data from the US, which has been mixed, but leading people to believe that overall, there could be a probability of a rate cut even if it's delayed. Does it augur well for emerging markets, or do you differ on that opinion?
Right now, what we're seeing is a very difficult backdrop for U.S. data. Q1 data, broadly speaking, surprised to the upside on activity, also surprised to the upside on inflation. In Q2, it's been more mixed. For much of Q2, we were getting downside surprises, softer data than expected. And then today we had with the PMIs much stronger than expected on both the services and the manufacturing side. And you're hearing at the same time more hawkish language from the Fed about potentially staying higher for longer, potentially needing to see more progress on the inflation front. So putting all that together, I think markets know that a rate cut is still coming, but is pushing out the expectations of that rate cut. And we saw that today where expectations really got pushed basically for a cut at the end of the year. I think for emerging markets, it's very challenging. On the data side, India, other emerging markets have been holding up very well on the data front. We have very constructive forecasts for emerging markets. We think they're going to grow on average at a similar pace to last year. But this higher for longer Fed creates a lot of challenges. And I think you saw that already today in some of the movements and some of the EM currencies. And it also challenges the ability for emerging market central banks to cut rates. So broadly speaking, I think EMs are in a good spot, but this higher for longer Fed can create some complications.
Robert, good morning. Tamanna here, and great to speak with you. I just want to take that point further where you talked about emerging markets and bring it specifically to India. Now, from the Indian perspective, we've seen largely FII selling through the month of May. Yesterday was an exception where you had the second day in May that you had FIIs actually coming in. What is the view emerging on India, and is there, in a sense, a wait and watch for June 4th? As a deadline, after which India becomes interesting once again? How do you view that picture?
I think for India, the economy is in a very good place. As I mentioned, we have it recording solid growth again this year, slowing down from last year's extremely rapid pace, but still growing somewhere in the mid 6% range. So still a very solid performance. And when you look across the data for India, you're seeing strength on all fronts. If you look at the purchasing manager indexes, for example, India is performing very well on both the services side and the manufacturing side. And broadly speaking, activity indicators have been holding up quite well. And inflation has been holding at fairly decent levels and continuing to moderate. So I think in terms of the story of India, very positive on the growth front. We do think that in terms of rate cuts out of India, that you're going to have a patient central bank and probably not going to start getting easing until later this year. So maybe that is when the story on India changes a little bit, when you start to see movements in the policy rate. Of course, as you said, also the election is front and center. So that could be another big risk event when we get the outcome of those policies. But I think India, as I said, is a very positive story, and I think is going to continue to stay a very positive story, not for just this year, but beyond this year as well.
Robert, hi, it's Samina as well joining in. And I want to talk to you about the India-China comparison. Both markets are at two ends of popularity in that sense, with India, of course, attracting a lot of affection, while China has been drawing a little bit of a cold shoulder despite its attempt to try to pull back. Of course, Goldman and Morgan Stanley list India as their top bet for the decade ahead. How do you feel? Do you think India is in a sweeter spot than China?
I think it's a very important comparison. And as you said, India, a lot of press for a lot of positive developments, not just in this year, as I mentioned, but beyond this year. One example to point to in an India versus China comparison is India has very favorable demographics relative to other large economies over the next, let's say, decade, compared to China, where demographics have been turning against them in terms of being supportive for growth, and that is likely to continue. But there are other important comparisons as well. I think China for this year, we're fairly comfortable that there's enough momentum in the economy to end up with growth somewhere around 5%. But beyond that, there are a number of enormous longer-term challenges, chronic tensions between the U.S. and China, which are likely to be in place regardless of who is elected in the U.S. Later this year. There are issues with youth unemployment, adjustments in the property sector. There's a long list of concerns that we have over China's growth over the medium to long run. So I think both economies, given their size, generally just have challenges they'll both have to overcome. But I do think the list for China is much longer. And I think India in particular is in a good place to benefit from its own dynamics, but also benefiting from some of the movement away in global supply chains from China that's shifting to other locales. Emerging markets like Mexico are benefiting from that. And I think India is probably one of the big beneficiaries as well in coming years.
Robert, very quickly, when you look at India for the next 1 year, would you buy Indian debt or Indian equity?
I think it's a great question, and I think there's a case that both can be attractive. And in terms of the growth dynamics I mentioned, I think are very favorable, and I think that can support the equity market. I know some have pointed out that equities have obviously appreciated a lot in recent years, but I still think, given the dynamics that we've been discussing, that can still be attractive. And I do think there's also strong fundamental reasons to look at the debt side as well. So I think, again, in terms of just Indian assets, I think broadly could be attractive in this environment.
Robert, just to talk about what looks good in Indian equity, and for foreign investors, banks, IT has been exciting, private banks especially. But they have seen an environment where your government-owned companies, mid-caps, and other sectors are doing better. Do you think that there is a case to review the Indian equity spend, and how would you look at it right now?
I think, as you said, it's a challenge given some of those factors that you mentioned. Now, given some of the dynamics that I highlighted, I think there is some scope for some very positive stories to be in play. In particular, the government has put in place policies to make India an attractive hub for all sorts of manufacturing. And I think there's a good chance that those can bear fruit going forward, given this shift away that we are seeing globally in global supply chains away from China and to other locations. So I think in the manufacturing spaces, there's a very positive long-run story potentially there. But broadly speaking, as I mentioned, I think as the economy continues to expand, and if it continues to grow at this robust pace or a robust pace, I think there's going to be a lot of opportunities in various sectors as those economies expand. Especially also right now, we're in a challenging environment for global trade. We've had a global manufacturing slowdown for much of the last year and a half. As that cycle starts to turn, that is also going to help a variety of export businesses, particularly within manufacturing in India. So I think there's a lot of opportunities, but particularly focused on this movement away from China story and into other areas of manufacturing that India can benefit from.
Robert, one last question from my end. I don't know if you got a chance to see that, but the Reserve Bank of India, the Central Bank of India, gave a very large dividend to the government. Our bond markets were shut yesterday, so the yields may actually react today. But it gives a lot of comfort to anybody who's watching the Indian macro on the fiscal glide path the government has laid out in the budget gone by. And of course, some more ammo for spending. Did you have a chance to look at that act done? And what is your view, therefore, on Indian yields or Indian bonds, considering that there's also the inclusion of the Indian bonds on the JP Morgan bond index coming up in a month's time?
Yeah. Exactly. And you're hitting on a lot of the key fundamentals I was alluding to earlier that could make bonds also an attractive option. I know we've talked before about India's inclusion, as you mentioned, into that index. Very important development. And I think, as you highlighted by the dividend, but just more broadly, is that India's fiscal position has been improving. So you are seeing a consolidation in the deficit, and at the same time, the economy is continuing to hold up very well. So I take that as a very positive story that the government is able to improve its fiscal position and the economy is able to weather that headwind and continue to record strong growth. So for all of those reasons, as you noted, I think they highlight, again, the underlying strength of the Indian economy, and then also some of that attractiveness, as you said, on the government bond side.
Robert, very lastly, while you sound very positive, and I guess a lot of investors do as well, why is India then seeing FI flows time and again? I mean, one thing for a fact is that in the last 12 months, FIs haven't been flocking to India with the same ferocity, to say the least. What do you think explains that? Is it to do with dollar hedging? Is it to do with valuations? What is it?
Yeah, and as you noted, I I think that the broader story for India is very positive, but we are seeing a challenging environment for global flows, as I mentioned, in particular because of, I think, this higher for longer Fed is likely playing a role, and I think money moving into other spaces just beyond that dollar. We've also seen large movements in commodities, for example. So I think there are other areas where you're seeing large flows at the moment, and that maybe can help explain some of the dynamics that you mentioned. But longer term, as I said, I think it's going to be a very attractive destination for capital. And I think that's more the path to focus on, is the broader long-term dynamics. But I think some of these huge market dynamics that we discussed earlier are probably, at least in part, in play of that slowdown that you mentioned.
All right. Thank you so much, Robert. Great speaking with you this morning. Fantastic voice to have to just make sense of what is happening globally and how the India story is emerging as well. So great to speak with you. So Robert Sorkin there, but just as we're speaking about the global view on India, this Chris Wood Greed and Fear note this morning was very interesting. And Niraj, when you shared it this morning and I was looking at it, I just picked out a couple of things that stood out for me. So the one part is where he talks about the two risk factors or the two key things from the India perspective. First is when he talks about the elections, and he says Modi has made more positive difference to ordinary people's lives in 10 years. He has been in power than any other leader or government in the world today. That's a big thumbs up coming up from a Chris Wood. And I know we are in a very politically polarized world where things get muddied, but one could argue that this is a guy who doesn't care about what happens in Indian politics domestically. He's saying it how he sees it. So I would just put that out there. He says this is why a repeat of the shock BJP defeat in 2004 remains unlikely in the extreme. So, even as we're in poll season talking about possible outcomes, this is a huge one, I thought.
Yeah.
He says still it's entirely possible, if not probable, that the ruling party does not do well as the BJP was hoping. Even if the BJP wins by only, double quotes, the number of seats in the last general elections, it's quite enough to run the government. The other important thing for the market to see. The second risk I thought was the more interesting one, which is what domestic mutual funds are speaking about as per Chris Wood, is an increase in capital gains tax or an increase in the tenure required to be eligible for it. And now this is the part that makes sense. I'm going to skip to plate 4, where he says that the reason that such proposals are apparently under consideration is growing evidence of retail speculation, most particularly in the options market, where India has options for individual stocks. Such paper speculation is unlikely to be viewed as healthy by Modi or indeed the BJP. For me, this was the one definitive line talking about what is concerning the market. We're looking at it as poll concern. I think the market is looking to what is coming next.
I think one more is the private banks.
Yeah, no,
the
sorry.
Very clear mention on
but just
private
the point
banks.
on this, options trades anyways attract business income gains, right? Because that's proper, it's
trading.
Not short-term
It's
trading
not
as well.
long-term.
Yeah, it's not even short-term trading, it's business income. So you anyways give 30% tax on that. Now, will an increase in long-term capital gains tax from 10% to 15% impact that? No, it won't. So let's see if there is capital gains tax tinkering done in a way that it dissuades the option markets in that fashion. Interesting to see. But just to the other point, every year before the budget, this is the risk. If they don't do it this year, I can lay all my money on the line. The next year, this will be flagged off as the big risk that will be tinkering with the capital gains.
Will it happen? Are you putting money on it happening eventually?
Just looking at, right now, just looking at what Prime Minister Modi has said about the strength of the capital markets being important, etc., very large increases to dissuade the long-term investor seem very unlikely. For the option side,
in fact, for all you know, they might, I'm just looking at this the other way actually, is to reduce the time horizon of long term. Would that change it?
No, increase even.
No, decrease it, because what are you competing with? You're competing with daily traders. You're competing with option trading, which is anyway short term in nature.
Yeah, but so therefore you increase, hang on for the long term, so you give the benefit for 3 years instead of 1 year.
A guy who's coming in for one series is not going to think, I mean, you're adding 11 months additional, right, on your long term.
But for the long-term side, you're
yeah, but
anyways at 1 year.
So I think the other thing that he talked about was private banks. I think that's another space that may see attention by FIs. HDFC is what he also mentioned about. And talking about what comes up before the budget, it's not just taxing, it's also inheritance tax. That's the other big one that shows up every year pre-budget.
But they have said, he's gone on record in public speeches, Prime Minister Modi,
that's
saying
not
that
we're
not going to do it because it was in the Congress manifesto, and he's saying we will not do it.
But having said that, the big families in the country have set up family offices outside, and that, of course, usually tinkers with what people usually think. But we'll take a break. We'll come back. Implied Nifty is indicating to a flat start, but lots of action on the F&O side, so stay tuned. We'll be right back.
Welcome. This is India Market Open. We are taking stock of how things have fared as far as the futures and options space is concerned. It certainly was a day to reckon with yesterday when it comes to the Nifty. Moved above that resistance of 22,800, and at the moment, perhaps potentially testing 23,000. This is a level perhaps a lot of participants in the markets were not expecting, but it has come to be. We are within touching distance of that right now. Let's see how things have in fact fared in yesterday's day of trade. So it was a day of strength, and we did see a lot of traction on the upside with the Nifty, of course, climbing to a new life high, and along with that, a substantial increase in open interest towards the May futures as well. A lot of traction has come through as far as the bank Nifty is concerned as well. So that's where once again we've also seen a lot more longs building in, or rather unwinding as far as the bank Nifty is concerned, because that's where we had some amount of shorts. Remember, the bank Nifty has been a relative underperformer, which is why there's a little bit of catch up coming through there as well. A lot of that was on account of some of your relatively smaller PSU banks. Now, moving on to what we can in fact expect as far as the option market is concerned going into next week and coming down to the Nifty, naturally and perhaps on expected lines. We saw a lot more traction when it comes to puts. A lot more puts written even as the Nifty moved higher, and we're starting to see a little bit of a shift as far as your ranges are concerned as well. Now, we did see a lot of writing around 22,800, perhaps on expected lines too, because 22,800 was that big hurdle which was taken out, and now it seems that's going to be a little bit of a near-term support, if you may. In terms of your overall open interest distribution picture, again, keeping an eye on how things are panning out. With respect to this upcoming week, at least in terms of max OI, on the higher end, we're keeping an eye on 23,500 call. That's where we're seeing a substantial amount of open interest build up. On the lower end, there's a little bit more concentration and distribution across a handful of puts, where we have a little bit more traction going on around the 22,500 puts specifically. But there is enough open interest distribution around 22,700 and 22,800 as well. As I was saying earlier as well, 22,800 now becomes that mark which is going to become, somewhat of an in and out kind of a level to watch out for. But let's move on and talk about the 6th of June expiry. That's the expiry which once again comes into focus. And even as we see the Nifty conquer 23,000 or thereabout, at least as far as the futures are concerned, because the futures did move above the mark of 23,000, and a lot of your option pricing will of course be based on futures, based on put call parity. But we're now looking at traction around 23,500. A lot of calls are being written there. Until yesterday, there was a lot of focus around the 23,000 mark and the respective calls. But I reckon, should we see the Nifty hang on to these levels as to where it is right now, 22,900 and thereabout, there could be a lot of unwinding coming through as far as the 23,000 calls is concerned. On the lower end, now we see increased traction building in a lot of puts as far as your 22,500 is concerned, and it's now a broad 1,000-point range if you only go by your open interest distribution. That's where. Let's move on and talk about stocks then very quickly. A lot of reactions on account of earnings. Some weakness in Lupin, Sun Pharma and Page Industries, along with Max Financial, which also saw shorts. But a whopping day for Adani Enterprises, which was, of course, the top Nifty gainer as well, up as much as 8%, a lot of longs there. And in terms of stocks which saw unwinding, let's pull that list up as well. Short covering for ITC, Metropolis, Coforge, Glenmark Pharma, as well as HDFC Bank. Now, this is as far as how things have panned out over the course of the last session. And of course, the question really is that what do you do with this data and where do you go? Well, let's get in an expert opinion. We have Milan Vaishnav of Gemstone Research who's joining us on the show. Milan, good morning. Thank you so much for joining in. Let's start with your view on the benchmarks, the Nifty. What's the way forward here?
Hi, well, good morning to all of you. I see a couple of things going on with Nifty. To begin with, yesterday, the kind of move that we saw was, to be very frank, was not that expected. But what I feel is that there are two things happening. One is that over the last couple of days, we saw India VIX and Nifty moving in the same direction. That is, both were moving higher. Now, this is a bit of, from a technical perspective, it is slightly unhealthy, because if you look at the historical instances, we have seen major tops getting formed when such behavior is observed. That is one thing. Second thing is that 23,000 continues to remain a psychologically important level as well. And I expect that the Nifty may widen its range of trade. It may oscillate back and forth in a wider range, but by and large, I don't expect it to go beyond 23,000, 200, 300 odd levels, even if we are seeing some upside volatility on or around June 4th. So I would expect that Nifty may move higher, but at the same point in time, it continues to remain vulnerable to profit taking at higher levels as we approach the general election date of June 4th. So I expect Nifty to, at the most, continue to move higher towards 23,000, 23,200 levels. But again, at that point in time, we might see some profit taking playing out in the markets.
So based on that, Milan, I believe you're playing a short strangle on the Nifty. Can you take us through what expiry this is and the premium play here?
Yes, this would be the last week where I would be playing strangle, because for June 4th expiry, either one will have to take some definitive directional bias, or one will have to play out completely safe by taking straggles. But this week, I would be going with a straddle with a bit of a wider range. I would be selling 23,300 call and 22,600 put for 30th May expiry. We would realize around 101 rupees of premium. And as a measure of risk management, we would exit the trade if Nifty ends up violating 22,600 or if it ends up taking out 23,300 levels.
Strangles at this moment, specifically with respect to the 31st May, are always going to be a double-edged sword. So you do have the advantage of expanded option premiums because implied volatilities are so high. But on the other hand, of course, you also do tend to see very, very sharp movements. But as Milan has mentioned, the way to perhaps curtail your losses in such a strategy is that as soon as it hits one of these levels, the strikes that you have employed in this moment, in this particular structure, well, you move out of that. And of course, beyond that, you continue to stay and, well, hope that you can, in fact, make the best of these premiums. But moving on, what stock is on your radar today, Milan?
Agam, I'm looking at Reliance this time. The stock made a very minor double top on the daily charts and has been in a mildly falling channel as a part of consolidation. And the stock is once again attempting a breakout. We are seeing on-balance volume reaching towards its high well before the actual price breakout. So all this picks out well in favor of Reliance. I would suggest going for a call spread where we would buy next month, that is June month's 3,000 call, and would be selling 3,100 call. For Reliance, we would be paying a net premium of around 37 rupees. Therefore, maximum loss would be to the extent of the net premium paid, that would be 9,275, whereas we are staring at a maximum profit potential of 15,725 rupees.
All right, so there you have it. That's a straightforward bull call spread as far as Reliance Industries is concerned. Milan, on that note, taking a moment to thank you for joining us and taking us through your views in the markets, also helping us with a handful of option structures that we can, in fact, go ahead and deploy there. And with that, it's back to you all.
Right, thank you for that, Agam. Now, a big focus in yesterday's trade was what was happening with the Adani Group stocks, and with the standard disclosures and disclaimers in place, important to focus on, as Agam said, Adani Enterprises top gainer on the Nifty, but it was the entire pack which really performed. And I just want to pull out this note from Cantor Fitzgerald that has maintained an overweight on Adani Enterprises with a target of 4,338. It sees a further 40% upside. Now, here's the important bit. It says that the latest Financial Times article is just noise from a long time ago. The FT report, they're referring to a report yesterday, or I think day before yesterday, in the Financial Times, saying that the group imported low-quality coal and sold them at high-grade coal prices. Adani noted the purchase order was a fixed-price contract. Coal quality is tested by the receiving plant, not by the supplier. So the FT report claims is not possible, according to Cantor Fitzgerald, given payment is based on the testing done by the buyer. They go on to maintain that India's economic growth bodes well for Adani Enterprises, and valuation does not fully reflect the value of company's current portfolio. The business growth emerged to result in shares accurately reflecting sum of parts valuation. They do have a key risks factor as well, which is government reliance, macro-related uncertainty, high promoter ownership, and lack of formal guidance. We have Kush Bora in our studios today. Kush, welcome. And we have Chakri Lokpriya joining us, Managing Partner at Red Strawberry LLP. Welcome to both of you. Chakri, I'm going to start with your take on the run-up we've seen in Adani Group stocks yesterday, Adani Enterprises, and also what Cantor Fitzgerald has said.
The Adani Group of companies, some of the companies are really well poised. If you look at Adani Ports, last year they reported FY24, that is, all-time high sales in the port volumes. The 10 different ports, they are lifetime high sales. And now if going into next year, clearly the volumes will be far higher and the profits are likely to be at least 25% higher than they were. Now, for a country that's growing in manufacturing and as the economic cycle revives, clearly, the ports play an extremely important business. Now, if you go into the other businesses, for example, Adani Total. Now, Adani Total is still in the early stages of its business, but the potential is immense. And the amount of growth that is available through the green energy portfolios for which we will see plans unfold. And so Adani Enterprises is a sum of parts story. And clearly, I think, all the noise of that you get in FT aside, these are all infrastructure businesses. And as manufacturing picks up, Make in India and industrial defense All these sectors require a lot of infrastructure related businesses, and therefore Adani Enterprises is well positioned. I think it's an attractive stock at current levels.
Sure. On the charts, does it still look attractive? I mean, it's going through a breakout of sorts. Adani Enterprise was up 9% in trade yesterday. New highs in place?
So, Samina, first up, a very good morning. Genuine pleasure to be here.
Likewise.
And if the Nifty were to hit 23,000, it'll be a memorable one. Memorable other which wise also, but well, on the whole, I think the Adani Enterprise stock has actually, broken out. 3,300, 3,350 was the resistance zone for a while now. It's broken above that and with a bang. Now, a lot of brokerages didn't have coverage on this. Maybe a lot of funds perhaps, didn't have it in their portfolio. That is now starting to, that will now start to change. I think the 4,300 target that you just mentioned a while back is perhaps a very realistic one, and I think I'll go by that. So if you don't have it in your portfolio, perhaps a good time to add despite the kind of run-up that we've seen in the last couple of sessions.
So on market open, if Adani opens flat, you're saying go out and buy it?
If you're lucky enough to get it at a flat opening, then
wow.
Yeah,
okay.
I suppose yes, you should.
That's constructive.
Yeah, very constructive. No, but also the delivery-based buying that we saw in Adani
about the
Enterprises,
2-week average.
Adani Ports,
even
L&T. So, I mean, these stocks, do they look constructive for more gains? Let's assume we start off lower today. Forget, I mean, not just Adani Enterprise, but Adani Ports as well, or L&T as well. Would you buy them?
So, Niraj, very honestly, my pick from the Adani stable were actually Adani Ports and Adani Power for the longest time. Ambuja Cements also to a degree. L&T is always a buy. In the last couple of weeks, we had seen a sharp dip in the stock. And even then, I was pretty constructive on it. I think, we've been fairly rewarded, on the stock with the price move. L&T, any kind of dip that you get should be accumulated from here on as well.
Okay, very interesting. And just the delivery-based buying that we saw in some of these stocks yesterday, Adani Enterprises and Adani Ports in particular, worth mentioning. That standard disclaimers, of course, the Adani Group owns NDTV and you're watching NDTV Profit. But yeah, that's the interesting bit. Before we get to some of the other stocks, should we get Kush's calls out of the way?
And calls, and also just a view on the index.
On the index, yes.
Because I know we covered that in F&O, but we were talking yesterday, Kush, about how all afternoon was like this reality game show. Distance to 23,000. My question to you is, do you see some profit booking coming in at open, or we are still on the same trajectory?
No, perhaps that's a challenge between Samina and I, because yesterday, during closing, when you got me on the phoner, I said, if you get a pullback, buy on dips. And Samina said, are you expecting a pullback? This market has been kind enough to give you those pullbacks and give you that opportunity to book profit at higher levels. Whatever mild opening we're seeing today in the red, perhaps, that'll be a buying opportunity. Also, one thing that I want to mention, around Feb, if I'm not mistaken, there was a speech in the parliament on the PSU space, by the Prime Minister. And that sort of happened to be the top for the markets, or at least the PSU stocks. A lot of names haven't really crossed that threshold yet. So while on June 4th, whatever the result may be, you could see a big bump up. But I think that could very well be the near-term top for the market, and you should take some money off the table, around that time, or maybe a couple of days after that.
On June 4th, right? On June 4th, you're saying?
On June 4th, or maybe even 5th, because we've typically seen a follow-through as well.
And it's buy the rumor, sell the news, right? And you're already seeing the markets propped up so much.
Yeah, my best-case scenario running up until June 4th was 22,800, perhaps a little more than that.
Now that's become an important support.
Yeah, that's become an important support, absolutely. So 23,300 is perhaps the level that I'm watching for. But, you never know with the kind of move that we saw yesterday. If market goes into that exuberance mode and, there's this party that we started today, just keeps going, you never know.
What about the Bank Nifty?
That's the interesting play. If I were to actually take a position for the June 4th, I would rather take the Bank Nifty call than the Nifty. Grossly underperforming. We've had a lot of names that haven't really done well in that space, now starting to pick up. The index itself has underperformed. I think, if I'm not mistaken, the Nifty is up about 25% for the 12 months. Bank Nifty about 15-16%. So there is some catching up to do there as well. 50,000, it's not just a psychological mark. We were almost there about a month ago. I think that's a very realistic number. So if I were to play for June 4th and maybe a little beyond as well, Bank Nifty where I would bet my money.
And I think I think Bank Nifty gave you that opportunity, right? I think yesterday we called it in the morning, hoping that there would be a sharp recovery after a couple of days of underperformance. And if the Nifty has to go to new records, you cannot do it without Bank Nifty.
Most certainly.
Very interestingly, I was seeing some of the sector moves, and I've been constantly saying that let's look at market beyond the 4th of June as well.
You're right.
Right? Bank Nifty did give you that opportunity. Maybe we got the levels a bit here and there because we thought 48,400 would be the level from where the short covering rally would kick in. But it's good to see that it came in much sooner. Look at what Nifty IT is doing. Correct? The index has formed a base. A lot of stocks that you're seeing have made a base and are starting to recover now, right? So that's giving that confidence. Autos have been a mixed bag, but largely you'd say in the positive. Cap goods have always been doing well in the recent past. So a lot of names have already been doing well. So, what do you sell? Correct? So on the whole, the texture of the market is positive. 23,300 is a very realistic number.
Yeah, and it's interesting because keep in mind the FI short covering is starting to happen. We saw signs of that yesterday and 2 days ago, and 23,000 was a large call area. If that gets taken out and then short covering get exaggerated, that might well help the markets too. But just before we get to stocks, of course, since we're on the topic of banks, Chakri, come in here. Yesterday, the PSU banks saw a bit of an uptick, presumably on the assumption that yields will come off because of the RBI dividend. We'll see yields react today. You reckon PSU banks are a pocket that you would fish in?
Clearly, they will benefit from the treasury gains, PSU banks more than the private banks. And, banks specifically whose portfolios are designed that way, their balance sheet is Canara Bank, Union Bank, and of course, State Bank of India being the leader. These companies will clearly benefit more than the private banks, but banks in general will clearly benefit as yields come down. The private banks have underperformed for valuations reasons. So I think, as post-elections and the growth starts picking up, economic recovery recovers, then the private banks also need to do a catch-up.
Okay. Kush, your stock recommendations for the day. Also a word on the PSU bank uptick that we saw, because SBI was rather muted relative to some of the others, despite there being some optimism around that. So your calls, yes, but also if you buy any of the PSU banks.
Sure. So let's start with that. Now, SBI, if I speak purely technically, there's an ascending triangle formation, right? And the resistance level comes in at 835, which is very close to where it is right now. Mm-hmm. So I think a stock like SBI is something that you should always have in your portfolio. But from a breakout perspective, above 835, it's a good bet from a trading perspective as well. We also like PNB in some of the other names. So that's one stock that you can have in your portfolio. There's a congestion around the 127, 128 mark where it is currently. Above that, I think there's a clear run up until 132, 135 kind of levels. So some of these PSU names should be added, and we know how these stocks react, right? They give you that opportunity to buy for a long time, and then just one fine day, there's a big spike. So perhaps these couple of names are good ones to have in your portfolio.
Sorry, please continue.
I was referring to my stocks picks, but...
No, please finish.
Sure. Couple of them, Bharti Airtel. Now, if you see, the stock has had a stellar run. There have been dips along the way, but at best, the 20-day moving average or just below that, it slipped and then recovered. So on the whole, for the last 12, perhaps even 24 months, the stock's done fantastically well. We know how it's going to go after the elections as well, right? The whole space is going to perhaps be relooked. So Bharti Airtel from a near-term target of 1410, 1440, a stop loss at 1350. Engineers India is the other pick. It's got a couple of things going for it, but from a technical perspective, volumes are up. The price movement is also, positive. Mm-hmm. So 295, 310 are the near-term targets. 270 is where I would keep my stop loss. And usually I give 2 picks, but because I'm in the studios today, why not one more, right?
No, it has to be double.
Oh, is it?
Double can answer for being in the studio.
I wouldn't mind that too. Right, the markets are in the favor, so I wouldn't mind taking a chance. Maruti Suzuki, the stock's been underperforming. I think there is a recovery underway. Yesterday we saw a sharp up move. Beyond 13,000, you could see a further 200 to 300 point up move as well. So for 13,300, Maruti Suzuki is something that you should keep on your radar. Brigade Enterprises did its thing yesterday. I think the opening also perhaps today will be a little in the green. So 1300 is the level that I'm looking for, for Brigade Enterprises.
Okay, Brigade has some news also today on a new
land
project.
Project.
Land parcel that they're doing with quite an attractive GDV. But that's the case for all of these real estate companies. So I'm not sure how far that goes. We'll take a very short break, but we'll be right back with pre-open rates. A lot more stocks to discuss. Kush is in our studio, so double the stock picks and indicators. And of course, we'll come back with Chakri on what you should do next.
Okay, back with India Market Open. A minute left for the markets to start. Amongst the stocks to focus on, if we haven't already, is Interglobe Aviation. Keep an eye out for that one. And Chakri, would love to come to you to understand what did you make of the results and this whole strategy that they are doing. Loyalty programs, business class, international long haul. Does that aid the sentiment around Interglobe?
Interglobe is probably the only one airline left in India right now in terms of both market share as well as operating efficiency. And, given that they were or still are a low-cost airline and they want to expand into new segments, that's a whole different ballgame of running an airline, which is a full-service airline around the globe. And so that calls for a different management skill set. So, when they're doing that clearly, and there are a set of risks involved, given the standard risks of high oil price volatility. The stock has done very, very well. But given that there is no competition for Interglobe at the current levels, in the current marketplace, then it is worth the trade.
Right, that's what it looks like, and that's not how it's going to be. That's what we think. Early ticks coming in on pre-open trade. We'll give it a couple of minutes before we go back and do a check. But a few stocks you want to see in early trade is going to be the Adani group companies after that stellar performance yesterday. It wouldn't surprise me if the counter sees a little bit of consolidation after yesterday's rally. In terms of earnings reaction, stocks like Indigo, Fortis will be reacting to their numbers. Adani is still trading flat, 3,400 on the counter. Still a positive bias, rather, is what we see. But we'll come back to that in a minute. Kush, IT has been lagging slightly behind. I wouldn't say that it's by a margin, but some of those IT counters, would you bet on right now? Anything from the pack that you like here?
So I don't think IT as a pack is out of the woods. I wouldn't call it that, but I'm taking heart from the fact that a lot of these names over the last month and a half have made a strong base. You look at the likes of Persistent, you look at the likes of Coforge, of course, and that's already done its thing. But even in TCS and Infosys and the big names, they've at least formed a base. So it gives me comfort that if I have to buy, at least I know my margin of risk in some of these names. Now, would I go out and bet big money on it? Not really. I would actually look at something like a Persistent and perhaps a TCS, just the two, from this space to start accumulating from, let's say, a 6 to 12 month perspective. But, is it out of the woods? I'm not entirely sure.
Very quick one. Any trades on railway stocks? We've already seen what's happened with RVNL, but I'm moving away from defense and talking about rail stocks because those as well are eye-catching.
You might as well speak about them in the same breath. They've been doing the exact same thing. And just as we were discussing a while ago that, who's to say where the top is really, right? Some of these names, they've run up quite a bit, but then they continue to do so. So I think an IRFC is something that I have on my radar. Texrail is something that's the other stock that I've got on my radar. If I were to bet between the two of them, Texrail would be my pick.
Two stocks I want to talk about this morning, at least in pre-open session. Pull up Interglobe Aviation, pull up Bikaji Foods. Both between 9 and, at least on BSE, 9 and 10%. Interglobe on the NSE rates about 3%. Let's see Bikaji Foods at a 10% top. That also because of the stellar numbers that we talked about this morning. Chakri, in that snack market, in that food market, any views on a Bikaji?
That market still continues to be a volume game and not a pricing power game. And so in that thing, again, it goes back to the same story, which is there are a few players worth the trade. But other than that, and they're good acquisition plays by the larger players, but they're good positional trades.
Okay. Kush, view on Interglobe and Bikaji?
Well, Interglobe, stellar run, but I think it's now due for a correction. We're seeing what I call the negative RSI divergence on this one. So you'll see the price hitting some sort of resistance around this 4,400 mark. Any dip towards 4,200, 4,250 would be a good entry point. So I will buy Indigo for sure, but on a dip. Bikaji, I will take this opportunity to exit. It's opening at that 590, 600 resistance band. So I'll take that opportunity to exit.
You talked about rail stocks, and I realized you mentioned IRFC and Texrail. One that's lagging slightly behind could probably be IRCTC. Again, 6 months, 60% returns, no one's talking about that. But I feel like that could be one more that may see a little bit of a upside or maybe not. I'm just trying to find pockets of trade where investors and traders can look at, right?
Aren't we all? Right? Most of these are already seem like taken, right?
Yeah,
Overcurrent
it's too late
already.
to the party.
Correct. No, see, IRFC we've been constructive on. I think
IRCTC.
I'm sorry, IRCTC we've been constructive on around 1050. We initiated a call. Targets met. The only problem with this one is that it doesn't have that kind of momentum as you find with the other cash names, right? But that's okay because this is an FNO stock. You would perhaps take a leveraged position and be happy with a 2 to 5% kind of an up move gradually. So IRCTC on the whole very constructive. If you don't have it in your trading position also, not a bad time. You could add 1080 should act as your stop loss.
Okay, some other stocks that could be reacting, and we'll wait for the pre-open rates to settle, but Fortis could have a bit of a leg up. Orchid and Bayer could have a bit of a pull back. Johnson Controls is the other one which could actually do well because after a fairly shabby quarter gone by, 20%. Well, these rates will settle. Maybe it'll still be up 20%, but Johnson Controls after a very weak quarter 3 has turned out with a remarkable quarter 4. In some sense, Chakri Lokpriya, it's also turning out to be a quarter for MNC stocks, right? From an ABB to a Siemens to a Honeywell to SKF to Johnson Controls now, the margin performance from most of these is exceptional. I don't know if you look at Johnson Controls, but if you do, great. If you don't, any of the MNC names that you like, even at these valuations?
The MNC names at these valuations, Johnson Controls still probably yes, but more comfortable with the companies you mentioned like SKF, NRB Bearings, Timken. These companies benefit not just from automotive, but industrial, defense, railways. All companies need bearings. And, with the kind of activity that's happening in each of these sectors, and the revenue growth, margin improvement that you've seen from each of these companies, I think that business momentum will continue for these stocks easily for the next 3-4 years to come. So I think they're still looking good to buy.
Right, that's the word coming in on some of those stocks that still look attractive at this stage. Well, the big story continues to be the RBI's bonanza dividend to the government, which of course gave that boost that bulls were looking for on D-Street. But remember, yesterday was a bank holiday, and the real reaction of that would be felt on the fixed income market today. Devang Shah, head of fixed income Axis Mutual Fund, now joins in. Devang, what are you expecting in terms of yields? We dipped briefly below 7% on Wednesday. As we go into trade this morning, where are the bets, and also good time to get into duration, you think?
Yeah, so I think you rightly pointed out, we expect the bond markets to actually continue to outperform. The long bonds should rally. The amount is actually significantly larger than all of us anticipated, and probably it's higher by more than 1 trillion. I think in the best case scenario, all were expecting a 1 trillion kind of RBI dividend. It's come to 2.1 trillion. So it's significantly higher. This can open up space if we get the current government back, and there can be actually a part of fiscal consolidation. Our perspective is we are expecting a 0.2 to 0.3 fiscal consolidation, which can actually lead to at least 60 to 75,000 crores of borrowing cut. If the borrowing cut comes, we genuinely expect yields to trend towards 675. Today, I think markets had reacted a bit to the news on Wednesday, as you rightly pointed out, and they actually traded a tad below 7%. Our expectation is into the run-up, and if we get the election results out next week, bond markets can trade towards 690. With the borrowing cut, we expect the bond markets to go towards 675, and it's a good thing for fiscal consolidation.
What are the timelines, Devang? Right? Because a lot of people are now trying to pencil in that in preempting the bond inclusion in the JP Morgan indices plus this RBI bonanza mean that the drop in yields could happen much quicker. What are the timelines you are working with?
Yeah, so our perspective is, as you rightly pointed out, Niraj, I think the thought process always in bond markets have been that they front run the entire rate cuts. And we have seen that time and again. Our expectation is today the demand supply dynamics for bond markets has been the driver for yields to rally, and they should continue. If you ask me a time frame, my understanding is if the borrowing cut comes and if we get the current government and we get the borrowing cut, we should see the 10 to 20 basis of rally in the next 1 to 2 months. So the perspective would be very near term. The only risk which we all need to keep in mind is that the government has actually built on a large surplus because they have not been spending due to election. It's seasonal and they will start spending once the election phase gets over. But government is actually sitting on good surplus today. With this transfer, the government surplus can actually go above 5 trillion. Once that spending comes and JP Morgan flows hit the market next month, if RBI does some tweaking through MSS stabilization schemes, I think there can be a break to the rallies. The only risk, if you ask me, for the downward trend in bond markets is if RBI uses market stabilization scheme to absorb the flows in the near term, that can put a somewhat of break. Otherwise, we expect the yields to rally by 15 to 20 basis in the next 2 months.
Devang, fair point. And of course, if we get a rate cut from the Fed anytime over the next couple of months, it's only going to aid that rally on the 10-year. From what I understand, short-term liquidity still remains tight. A and B, also, what's the word on corporate bonds? I know that they've not caught attention of investors, but of course, with JP Morgan's inclusion, that might also become a good space for investors, you think?
So completely agree. I think, see, JP Morgan index, if you look at the constituents of the index and the weightages, they are significantly everything into government bonds. So yes, the first leg of rally would come probably in government bonds, but there will definitely be a catch-up rally in corporate bonds also. Corporate bond supply has also been muted. And our perspective, if you ask me, is the 3 to 5 year segment, which is still trading at around 770 levels, is a very, very good point for investors to look at. So from a corporate bond market perspective also, with liquidity easing massively, limited supply, and the overall macro environment good for rates, our anticipation is that corporate bond markets will also catch up in the rally. We like the 3 to 5 year corporate bond segment at this point of time.
Okay. Devang, really appreciate you taking time out and giving us this lowdown. Very important points, and thanks for the cautionary note around what the RBI could do as well, and the resultant impact on yields. We really appreciate your time today. Well, that's the view from Devang Mehta of Axis, and keep an eye out for some of the yields and some of the stocks out there as well. As the pre-open rates have settled, we don't have a dip in Adani Ent. We have a marginal flattening out of Adani ports, if you will, but a lot of individual stocks otherwise doing okay. Kush, pre-open rates have settled. What stands out for you now at the atop your list? Because when I look at the Nifty 500, for example, as is always the case, a clutch of stocks flying around, both on the upside and the downside. I mean, there's a Schneider which is correcting, or a Godrej Properties correcting, whereas a Bikaji is gaining.
Well, a couple of names, but I think I'll stick to auto ancillaries in this case. A Lumax Auto Tech is doing well. I think from a near-term perspective, 515, 525 should be your targets if you go long on this one, and that's a must-have in your portfolio. 475 is where I would place my stop loss. So a good opening above the resistance bands. So I think 515, 525, the next levels to watch for on Lumax Auto.
Vodafone, 4% up move yesterday, 14.25 in pre-open. Does it look like a long trade here? And slew of brokerage upgrades.
Well, once bitten, twice shy. The stocks, this is an overcrowded trade. This is an extremely overcrowded trade. So it'll be very difficult for, the retail traders at least to make money on this. Perhaps if you have some of it in your portfolio, then you could wait for a level of 16. But other than that, I would just wait and watch on this one. Time and again, we've got news that comes in, then fizzles out.
Chakri, in terms of, what would be your top calls this morning, and which space would you look at? Now, this is a time when our viewers would be wondering, what do you do? You've already had quite a run-up in the market. Any of your top picks today?
I'd still look at those companies, which is those SKF, Timken, NRB Bearings, because, they benefit from all the reasons we discussed in terms of, auto industries, railways, defense, industrial. And outside of that, power financiers, whichever power financiers will continue to be in focus for the next foreseeable future. PFC, REC. I think so. Those are the trades that I would stick to.
Right. A couple of stocks that will continue to remain in focus is going to be defense, railway, banks as well. Kush, I don't know whether you've talked about banks, but in the PSU pack, anything that you'd consider a long trade on?
From the banking space?
From public sector banks specifically.
So there's one name that we've not discussed, and we like that, which is Union Bank. It's broken above some of the key, averages, 148 being one of the key resistance zones. So I think Union Bank, from the cash stock perspective, you should have in your portfolio. 156, 159 are the levels to look for. Support zone comes in at 148.
And Honasa, have you seen that one? The stock is expected to see a gap up post its earnings. Looks like a trade there too. 445 is what it was last traded at. So yeah.
Exit,
huh? Yeah. So Honasa is a sell. 6% uptick in pre-open trade is what's expected. But one last call before we go into market open.
I'll stick to Lumax Auto Tech. The stock's doing well. We've seen a good uptick in terms of volume as well. So 515-525, the levels we discussed, should act as a target.
Well, Lumax Auto, watch out for this as well. Interestingly, the Nifty, just mark the pre-open rates on the Nifty if we can before we continue with these counters, because we were very close to 23K on close yesterday. If we can just get the Nifty pre-open rates here for a moment before we get back the counter, because we are very close to the 23,000. We are currently at 22,930. So just about a small dip. Will this dip get bought into? Well, Kushbura certainly believes it will. Let's wait and watch if it does. But Chakri, take a moment to thank you for joining in today and giving us your thoughts. Really appreciate your time this morning. And keep in mind that while the markets may start off flat, some eyes might also be on the PSU banks and whether they continue the momentum, because bond yields haven't quite reacted the way a few people might have anticipated. But here are the first trades. Indian markets in line with the Asian markets are soft, not as soft. That's the key thing, about 0.19%. Banks should come up on your screen and mid caps and small caps then. Bank Nifty 2 lying flat. What about the broader markets? They actually underperformed the large caps yesterday in today's session, starting off absolutely flat, almost in line with what the large caps are doing. So a bit of a nothing kind of a morning. Let's see if we build on from this. Let's get the heat map up on the screen, the large caps, and see what's moving and what's not. A lot of red, very little green. Let's start off with the green first. Ahead of numbers, Hindalco is up about 0.5%. Ahead of numbers, NTPC is up about 0.5%. Axis Bank is weighting between 0.5% to 1% kind of gains. There's strength in Divi's, ONGC, but nothing really worth talking about. Maybe a Hindalco which had corrected yesterday because commodities per se have cooled off a little bit. What's not doing well? Yesterday's key gainer Adani Ports is down about a couple of percentage points. Coal India down about 1%. M&M down about 1%. So a fair degree of red. This may change, by the way, but for now, the standout mover, Mahindra & Mahindra and Adani Ports on the downside. Maybe a Hindalco on the upside. Not as much movement in large caps, about 0.25% lower.
What we saw yesterday at opening as well, Niraj, and viewers, if you look at what kind of an opening you had yesterday, it was quite similar. I would say a flattish kind of a start, and then you had that pick up around noon or so. Now, what's happening in the broader indices? Similar, flat to negative kind of an outlook on the small cap as well, just pretty much flat. But there are pockets of action that you can see this morning, and as we've been seeing over the last several sessions, it's usually result oriented. So let me start with Bikaji Foods. Bikaji Foods has had a stellar quarter, and in part because of inventory levels going down, raw material costs going down, 6% up on it. Honasa Consumer, another stock which has had another company which has a good quarter. We asked Kush on both of this, and his call was sell, but we'll ask him again if he retains that. Interglobe Aviation is the other one that I wanted to talk about. It's going to start a business class plan, and more details in August, but 2.5% up on what is a profitable airline in the Indian context. That's quite a rarity. V is one that I wanted to mention. Vodafone Idea, there's a UBS note which is upgraded with a target price of 18 rupees. That's about 3.5% up. BDL is a stock that we've been tracking very closely. Bharat Dynamics continues to have a great run today, about 12.5% up. And then Johnson Control is the other one that I would mention. Niraj spoke about this on the trade setup as well. Earnings impact has been positive, about 17% up on Johnson Control. So you're seeing largely reactions to numbers right now, and on the broader market sense, maybe a bit of a pause in terms of any big moves. Samina, what are you spotting that's interesting?
They can't not spot BDL again this morning, right? I mean, there's a pause everywhere else. This one went through a stock split, which takes effect today. That's the broader market picture. Marginal outperformance, but nothing to write home about and nothing at the same time to worry about. We've seen a record high yesterday. It's only expected to see consolidation this morning. And of course, we've also got a handover that's fairly weak from world markets. 13% on Bharat Dynamics. I mean, this rally has been phenomenal. It's up 60% in the last 5-6 odd days of trade. This morning seeing a 12% up move once again. So 1:2 is what the stock split has been, and the gains very reflective in early trade this morning. Well, becomes, I guess, a lot more attractive to retail investors who have a smaller kitty of money in that sense. Few other names that are worth a mention is Bikaji Foods. Good in earnings. Stock is up 6%. Honasa also, Tamanna marked is looking good with a 6% uptick in trade. JK Lakshmi, worth noting that counter 2 is seeing a movement. Vodafone Idea seeing not a marginal uptick, 3.5% higher this morning on a slew of brokerage upgrades that have come in on the stock. Garden Reach was your big gainer yesterday. Let's take a check if it's actually seeing some profit taking after. No stopping this one either. 18% yesterday, another 3% being added today. Be mindful, Cochin Shipyard will report numbers as well, and this one's not too far behind in the race to be the top gain in terms of shipbuilding companies. 5% higher on Cochin Shipyard. Numbers come out today, which are expected to beat street expectations. Ahead of that, you are seeing a sharp up move in Cochin Shipyard as well. Mascot Docks, while we're at it, let's do a quick check of how this one's doing. 1.5% higher, not bad there either. Rail stocks, that's usually been the theme over the last couple of weeks of trade. IRFC, RVNL, which was a star trade last week. IRFC is up 1%, was Cush's buy call on IRFC. IRCTC and Texrail, a few other ones that you want to take a check on. Those counters also may see a little bit of an up move. Marginally high in Texmaco is what we have, and IRCTC trading flat. This one is not being able to participate in the move that some of the other rail companies are seeing. A whole bunch of earnings. I'll quickly take you through a few reactions to that. JK Lakshmi, numbers were solid. The stock moves up. You've got Barbecue Nation that's also looking good in trade this morning. Rather, that reported 5.5% on JK Lakshmi. You've got Barbecue Nation that's trading flat. Purvankara reported a loss versus a profit. You've also got Sandhar Technologies, Bikaji Food that I talked about, ICRA. So Purvankara is down 5%. ICRA reported numbers. Zaggle Prepaid that I highlighted this morning. Very strong earnings from Zaggle Prepaid. 11% on ICRA. Zaggle up 5% is what we have. Bayer Crop Science, Fortis Healthcare, Asian Granito, Orchid Pharma, Time Technoplast are some of the earnings reaction you're seeing on your screen. Manglo Chemicals and Fertilizers and Landmark Cars. So these are a whole bunch of mid to smaller companies that have reported numbers, and some of them seeing sharp reactions on all sides.
Just one more is Biocon out of the FNO ban today, and has really shot up in trade. But let's get in a special guest, Ashwini Agarwal, founder of Demeter Advisors, with us on the show. Ashwini, great having you, and thanks for agreeing to talk on such a short notice. But we were preempting 23,000 this morning. Hasn't quite happened. Will probably happen maybe through the course of the day or next week. Are you constructive, Ashwini, on the markets currently?
Morning, Niraj. Thank you for having me here.
Pleasure is ours.
Being constructive on markets in the long term, I think that's the statement I'd like to make. In the short run, it's very difficult to predict because we've got some very big events ahead of us. And also, I'd like to say that, notwithstanding the election results and what they do to the markets, our markets are also being driven by what's happening around the world. And globally, several markets are touching their all-time highs, and therefore India is following suit. But, as we have seen in 2007 and prior to that in 1999-2000, global events will determine the course for the Indian market as well. And I think in several pockets, valuations are very, very expensive, very stretched, and optimism is running very high. So while I'm constructive in the long run or in the medium term, I would say that there are pockets of exuberance in the market which investors should be a little wary of, where you're bound to see either losses or no money being made on a 3-year or a 5-year basis. I mean, one can't say what happened in the short run.
Ashwini, a lot of talk around the RBI bonanza yesterday and what that did to markets. Now, do you think that impact has digested in a day, or can it continue, especially for banks, but markets at large? It's a large bonanza.
Yeah. No, it is. So I think fiscal discipline being set right, and the impact that it had on interest rates yesterday, especially on the long bond side, was accepted well by the market. And let's see what happens going ahead. I think the trajectory for interest rates looks to be stable for at least 3 to 6 months and then hopefully down. But again, looking through the comments of the MPC committee members for the latest committee, I think the consensus is building around a rate cut. And I think what's holding us back is that global rates are not looking to fall anytime soon. Inflation is also kind of well behaved, more or less. So I think the RBI might hold off for another 3 months or so. But interest rates direction is what the market priced in yesterday. And I think, that's got done. When the new government comes in, the fiscal budget they present and the fiscal trajectory they present would be very key to outlook for the medium term for interest rates. And that's something that I look forward to assessing as we go ahead.
Ashwini, good morning. Tamanna here. I'm wondering what is the real strategic thought of what happens June 4th. We've been so fixated on an election outcome, possible policy continuity. I think perhaps people are at the risk of losing sight of the bigger picture. What really changes in terms of expectations of what a new government do and how it translates into stock choices? You have that same basket, right, that you keep looking at: infra, rail, defense, etc. What else is there, and how much more can that further rise?
Good morning, Tamanna. Thanks for that question. Let's go back to what happened in 2008 and 2000, because, the best that we can do is study history and take lessons from it. And in both those instances, when the market meltdown happened, the triggers can be what they were. That doesn't matter. Where you survived was that if you held reasonably valued stocks at the top of the cycle and you stayed away from the bubble stocks. Now, coming to your question on what happens post June 4th, the base case the market is pricing in is that the BJP comes back. Fewer seats or slightly more seats compared to the 303 that they had in the last Lok Sabha elections is a moot point, but nobody is expecting that BJP will not lead the next government. Now, if that were not to happen which is not the consensus view right now, if by any chance that were not to happen, then I think there will be some question marks as to who forms the government, what their policy imperatives will be, and that might create a little bit of ruffling of the feathers among investors, and you might see some of the expensive stocks sell off. Will that happen? The probability appears very low, and the market's obviously not saying so. So I think also I would like to add that sector-specific policy might be different if it is a non-BJP government, especially relating to defense or probably railways, and they may allocate resources away to other areas of their focus. But I think broader policy direction, if you see since 1991, when Manmohan Singh, finance minister, started the process of opening India's economy, has been more or less consistent. I mean, yes, there have been some emphasis in one area versus another area, but broadly nothing has changed. Even if you look at the current government, it has more or less carried on where the previous governments left off. And I think that process will continue. So I think, as a medium-term investor, what I try and do is look past the immediate events and see what I own. Does it offer me value from a medium-term perspective? And do I think that I make a reasonable rate of return on what I own over the medium term? And I think that's the only way to invest. At least that's my view.
That's a fair point, Ashwini. So directionally then, what should investors and long-term investors look for, and investors especially who are riding on the India story, right? Do banks make a comeback, especially private banks? Interesting, note from Chris Wood this morning on that point that they've underperformed. Infra plays. Any views on the Adani Group stocks? I'm also asking you that because, they have been the big performer in the last couple of sessions.
So on banks, I'm also reasonably constructive because, finance stocks, NBFCs and banks have kind of not done as well as the rest of the market, and valuations are still reasonable in that area. we are seeing no signs of any stress in the credit environment at this point in time. Margins are reasonably stable, so earnings growth is going to be reasonably strong. And at the PSU end of the spectrum, you'll continue to probably see lower than normalized credit costs because of the recoveries that are going through the system. So I think banks across the board will do well, and private sector banks will also do well. And I dare say that some of the NBFCs will also do well because of the valuation support that they enjoy and the earnings environment that they are experiencing. I also think that pharmaceuticals, chemicals, especially upstream chemicals, where inventory drama that unfolded over 22, 23 and first half of fiscal 24 is now behind us. Earnings are starting to normalize. That looks very good. The pricing on generic drugs in the US is reasonably constructive. So I think, those two spaces also look reasonably interesting to me. I would also add that a few consumer names, and you have to be very careful bottom up here because valuations in the consumer space are still quite challenging, but there are opportunities out there also look interesting. And those would be the kind of three areas that I would like to pick at. And, infra, I think business is there, but I think valuations are challenging. So, in a lot of places. So, I don't really have that many ideas in the infra space right now. And I'm staying out of defense and rail for the time being because as a value investor, the euphoria scares me. They may continue to do well and continue to make a lot of money. I don't know, but I'd rather stay out of the party.
Okay. Kush, here's the question. We now starting to move back a little bit into the green. Is 23,000 on the cards in the next 1 hour?
Before you leave the studio.
I was telling Niraj that I will not leave the studio till we hit 23,000. I hope that doesn't take my weekend away. I can always feel that childlike enthusiasm for this milestone, which I rarely do, perhaps the studio effect. The answer is yes, there is a very stark possibility, and my confidence comes from the fact that the bank Nifty did not even slip in the green, opened and is gaining from strength to strength. I suppose that that will contribute, and perhaps, before the end of this conversation, I'll try and drag it as much as I can. No, I won't. But yes, there's a very good possibility that 23,000 in the next couple of minutes, perhaps an hour.
7 points away right now, 6 to 7 points away. Now,
I suppose I should keep going.
Yeah. Oh, you're saying it's you, is it? The more you talk, the more it comes. No, but the point is, Kush, that 23,000, of course, exciting for us to celebrate. But where next?
It's on it. There you go.
It's
voila!
Have we hit? Yes, we have. Hey, yes, we have. Fantastic. So this is the big moment, the big morning.
Kush, the quick trade, 23,000. Go long. Do you press the button?
On the bank Nifty, not on Nifty. I'm resisting the temptation. Go long on bank Nifty.
Take profits at 23,000.
Oh, for
if you're
sure.
running long?
Oh, yeah, for sure. Yes.
Okay,
yes.
so take profits at 23,000 and don't initiate fresh longs. That's the word coming in. But bank Nifty still looking very good.
For today, take money home on the Nifty. Enjoy the weekend. Bank Nifty is where you want to transfer if at all you want to transfer your long positions.
But you'd ideally not go into the open positions this weekend. Is what you're saying?
Yeah, on the Nifty, no. Bank Nifty, I'd still say yes.
Also, I've got to ask you, Adani's turned into positive territory as well. 3,400 on Adani Enterprise. This looks like a trade right now?
It does, especially if you're looking at it from an investment perspective, for sure. 4,000, 4,300 is perhaps something that you will see in the next 6 to 12 months.
That stock's turned positive, not looking too bad. I don't know whether we still have Ashwini with us. Ashwini, hi. It's also Samina joining in. A quick take on rural consumption. You've highlighted a few sectors that you like and that you're constructive on. Yeah. Of course, as we speak, I guess it's good omen. We have cushioned both of you here as we've hit 23,000 on the Nifty, a record high as we see it. Good to look at for sure. But in terms of rural consumption, do you feel like that is a space that's worth calling a short on, maybe in the second half of FY25?
Samina, yes, the answer is yes. So in the short run, what you're starting to see in the rural space, and I think it will play out in the June quarter as well, is the fact that election spending does put a lot of money in the hands of the consumers, especially in the hinterland. You do the math, 542 seats, the two are nominees, I'm leaving those out, multiplied by 3 candidates, multiplied by my assessment is 40 to 50 crores per candidate. So you're thinking about spending close to 1 lakh of crores in this election process, and a large part of that money ends up in the hands of the lower half of the pyramid, if we were to think about it. So I think rural demand will come back. On the medium term also, I believe that rural demand will come back because we are seeing 3 or 4 big trends. One is that agricultural product prices have been reasonably constructive. B, I think we are also seeing a lot of manufacturing move deeper into India. And I think this is a very strong medium-term story in India. We are seeing competitive federalism among states. States are working very hard to attract industry into their own state and encouraging them to go deeper into areas where they can get cheaper labor, more stable labor, less absenteeism. And all of this is very positive in the medium term for India as well as for rural demand. And last but not the least, I think, the hangover of labor migration that happened at the peak of COVID is also now starting to stabilize with all the construction activity that's going on in various parts of India, in real estate and infrastructure, which is attracting labor back from rural India. And there are money transfers that happen from urban to rural India, which also affect rural demand. So I'm reasonably constructive that rural demand going ahead will not be as weak as it has been in the last 2 years.
So, and that is rural demand. And of course, Ashwini, thanks for extending this appointment a little bit. But I just want to dwell for a moment as to what's currently the market set up as at 23,000, because finally banks are starting to come back into the fray. So if you just look at, viewers, just look at the heat map today or just look at the point contributors today. 2 days on a trot now, we have had HDFC Bank leading the pile of sorts, 0.61% higher, but let's get the point contribution for the Nifty on the screen, and you will see HDFC Bank being right up there when it comes to leading the gains on the index, 15 points. Nothing dramatic, but leading the gains. L&T, SBI participating. A bit of an old economy flavor out here. And Ashwini Agarwal, that's the point. I mean, we saw the first buying from FIs yesterday. There is still a lot of short positions from the FIs on the index futures as well, on the market wide. Would you reckon that old economy, banks, private banks, HDFC Bank, etc., if the market were to go higher, would probably lead the way because of the nature of the buyer being different, because it can't be the FII as opposed to the DII now?
It could happen, Niraj, but these things are very difficult to anticipate with any amount of certainty because India continues to be very expensive on a relative basis compared to several other markets in the world. The China market has done very well. Commodities have done very well. Gold has done very well. And there are different destinations for money for those trades. So FIs have been net sellers of late. And I don't know if we can take a cue from what happened yesterday and extend that into the future. So that's not something that's very easy to predict. You're right. If FIIs were to drive the next phase of the rally, you would see more buying in the names that you mentioned, especially the frontline names. But as an event, it's very difficult to predict.
You know, it's giddy times, I would say, as you have markets hitting all-time highs, and then people wondering how they can make that real money. Just before we let you go, Kush, and you've been sort of lucky mascot for us in the
as
studio.
As has been Ashwini, agreed to come to us in this last moment.
This has been a good day. This has been a good morning. But then you have to, before we thank you, leave our viewers with, at least 2 ideas of what to do in the market right now. You've seen the opening, you've seen what's working, Bharat Dynamic, Biocon, Vodafone, Indus, some of the sizzlers today. Any of those you like? What are your top 2 ideas?
Well, I like PG Electroplast. Do not be overwhelmed by the move that we've seen recently and the 2.5% kind of an uptick that we're seeing today as well. I think the stock is poised for a run up until 28.50. So that is, one stock that you should have on your radar from, let's say, a medium-term perspective as well. And, if I were to pick one more from a portfolio pick, then Jyoti CNC makes the cut. A very recent listing, so to say. But, even in the recent times, the stocks moved just only about to its 20-day moving average and then rebounded. So Jyoti CNC and PG Electroplast are the 2 picks that, I will suggest as the closing remarks.
Okay, so 2 picks there from Kush. Thank you so much. Ashwini, thank you so much for joining us. What a great day to have you on. Hope to see you back soon. We're taking a very short break, but our coverage continues, not just on the markets, but we're talking to the management of Bikaji Foods about their March quarter on the other side. Stay tuned. Welcome back. We're talking about Bikaji Foods this morning. It's been quite a delicious quarter actually for the snack maker. Revenues up 33%, EBITDA's up 160%. Margins have grown from 13.4 to 26%, and net profits up almost 200%, 116 crores versus 39 crores. What's really pushed the growth this quarter? Manoj Verma, COO, and Rishabh Jain, CFO of Bikaji Foods International, joins us on the show this morning. Welcome, gentlemen. Thank you for speaking with us. Mr. Jain, let me begin with your take on the numbers. From the face of it, volume growth has improved, but it is your cost of raw materials which has come down significantly that has really helped. So are we seeing EBITDA margins which are sustainable?
So thank you very much for inviting us. So last year has been very good for us. So we done a lot of effort in setting up right team, setting up right talent across the company. So from top line perspective, of course, so our volume growth is close to upward of 15% last year, and overall top line growth is close to 33%, but there is a PLI impact, PLI income which we booked in this year. So overall, our revenue growth is close to 13%. And when we see fully, our revenue growth is close to 13.5%, close to 14%.
Mr. Verma, you want to come in on a question that Rishabh just answered. We talked about margins, but give us a sense of have margins improved so substantially because your export business is looking good? I think exports have seen a jump of over 200%.
Yeah, so of course, margins have definitely improved, and I think the team has worked across parameters. So the external one, if you talk about, which is beyond our control, was the commodity prices. Yes, that helped us. But in that context, we have also passed this benefit to our consumers, and that's where you will see volume growth is ahead of our value growth. So we've passed the benefit. However, we have managed to gain on the bottom line is by building on the efficiencies. Also, our new plants got operational, and this is what has helped in this stuff. Exports, yes, has done extremely well for us, and we have delivered a fantastic growth. And more importantly, we are better set up for the times to come.
Mr. Verma, Tamanna here as well. I just want to take that raw material cost question to you as well. I mean, what do you see significantly changing and sustaining for the next financial year? And could you give us your guidance on that front? A, do you see raw material costs at the level they are right now, trending upwards or lower? And do you see growth next year also being driven by volumes?
So, Tamanna, two things I want to answer this on. One, of course, last year was we benefited in terms of the commodity prices. What we see is that, it would be, it would continue to be what it is for some more time. And post-election, you don't know how things look up. But the readiness, what we as an organization has done in terms of, forward purchasing and all that stuff, I think we would be able to cope up with as the things will move up. Going forward, now we expect that a couple of percentage will be high on the value vis-a-vis volume growth. So there would be some price increase. That's what we anticipate in this year.
Rishabh, going into FY25, double-digit growth and maintaining those margins, is that sustainable? You want to just guide us for top line and bottom line growth over the next couple of quarters?
Yeah, so largely we have set up all the capacity in last 2.5 years, right? So currently we are at close to 43-44% utilization. Our major focus will be to utilize that plant. And our target, of course, is to grow at close to 10 to 15% volume growth, at least for next 2-3 years. That's the target we are taking off. And from margin perspective, of course, so last year has been extremely good for us. Our EBITDA was close to, on year end, overall 16.8%. But yeah, and gross margin is close to 64-65%. But that's a plan. So we need to build on the same and with lot of efficiency around this.
Mr. Verma, just now a few questions on where you see the broader industry going. We've had huge news in your sector with a player like Blackstone coming in and acquiring a key player. What does that signal for the snacking market? And is there any sort of inorganic growth that you are looking at?
So I think the names you're talking about speaks loud about that this category is on a spotlight. I think for last many years this was not as much seen by the investors and all. But in last couple of years there's a lot of talk and focus on this category, which is what would give us a better runway to play both in terms of in the competitive environment with the external world, and also will keep challenging us to explore the opportunities what we can really make for ourselves.
And in terms of trends, again, this question for Mr. Verma, Mr. Jain can come in if he wishes. Are you seeing Western snacks improving, or is it all about the desi stuff that is growing? And that question first to Mr. Verma.
So today, if we speak about Western snacks, contribution is by far higher than the traditional snacks. And over years, Western has been growing faster than the traditional snacks. Going forward, I think it would be hand in hand kind of a growth. Both these categories would be growing almost plus minus a little bit up and down.
Okay, just one last point. What is the biggest headwind in your view? Is it from the unorganized sector? Is it also from a more health-conscious customer base? What do you see as the biggest challenge, Mr. Verma?
So you've spoken both. These two are the headwinds, but more importantly, the healthy snacks is more of a talk at this point in time, and each of the companies working behind it. In fact, we have a bouquet of products which is ready to address these set of consumers. But I think we are a little behind the time, and as the time comes, you will see a lot of products which are already ready flowing in the market. But yes, that's one which is very highly talked about. Also, what happens is during the times when the prices of raw material are low, that's where regional and local players play a critical role, coming up as a discounter brand and all. So that, of course, will be there, different players in different geographies. And I think that's what is the rule of the game, and we'll have to keep overcoming all these.
All right. So health food and wanting healthy snacks is of course, the next pivot that Bikaji will have to be making. Thank you so much, Mr. Verma, Mr. Jain, for speaking with us today. We're taking a very short break, but on the other side, you will hear from Max Healthcare Chairman and Managing Director Abhay Soy talking about the company's Q4 performance. Stay tuned.
Welcome to NDTV Profit. I am your host Varsha Chandanani. Max Healthcare reported its Q4 FY24 results, and to speak about the results, how were the number, how was the quarter, and how was the FY24 as a whole, I am here joined by Mr. Abhay Soy, who is the Chairman and Managing Director of the company. Hello and welcome to the show.
Thank you so much for having me.
So, Mr. Abhay, if you see Q4 being one of the strongest quarter for us, our revenue was up 17%. Even we had a margin of 27% versus 28% last year, but net profit was up only 0.2%. Now, Q4 being the strongest quarter, what stood out for us, number one, and were there any disappointments?
So, as expected, I think our revenue and our EBITDA has been the highest ever. In fact, we've crossed a new milestone, which is 500 crores of EBITDA for this quarter for the first time. What has happened is our translation of EBITDA to net profit has sort of reduced because our EBITDA to free cash flow translation, which used to be 78%, has come down to 70%. This is due to higher incidence of tax. We're paying a higher amount of tax, and therefore you essentially see the net profit being fairly flat compared to what our EBITDA has been, which has been seen a growth.
And how was the RPOP for us in this quarter versus March 23 last year?
So there's been more than a 10% increase in RPOP, and there's been year on year there's been a 15% increase on revenue, and there's been a 15% increase on EBITDA as well. But like you rightly pointed out, the net profit has been declined.
Now, if you see, Mr. Abhay, we have reported 15% growth in RPOP over the last 3 years. Now, I am assuming this is because of change in mix, then of course international business and your venture into oncology segment as well, the increase in oncology segment as well. Now, where do you see this RPOP going? I mean, can we maintain this 10 to 15% growth in RPOP every year?
Absolutely. I think there's always an interplay between RPOP and occupancy. Whilst you see a larger growth in RPOP, in our case, you see a lesser growth in occupancy. And that is, in some manner, one sort of answers for the other. when you don't have idle capacity and you have capacity constraints, automatically you will have a higher increase in ARPOB. But going forward, as new capacities come on stream, you will see higher growth in occupancy, but perhaps a little more tempered growth in ARPOB. But having said that, the overall EBITDA per bed and overall EBITDA levels and even the revenue levels will be significantly higher.
So, say for next 2 to 3 years, what top line are you expecting in next 2 to 3 years, and also the margins like 27-28% margin, can we see more uptick in margin from here, or 27-28% is the normal margins that is sustainable?
So, I'm not going to guide you to exactly what our top line growth is going to be, because we've never sort of done that in the past either. We don't give forward-looking guidances. But what I can tell you is our focus is always on EBITDA per bed rather than EBITDA margins. EBITDA margins can come down. I mean, if you actually look at this quarter 4 versus quarter 4 last year, you will see the EBITDA margins per se have come down perhaps by 50 basis points. But EBITDA per bed has increased by about 14-15%. Eventually what we have is number of days in a year and a bed inventory. So EBITDA per bed is a truer sort of guidance. We'd rather do a $10,000 or let's say 10 lakh rupee surgery and have a 20% margin in it than do a 2 lakh rupee surgery and have a 50% margin in it. So, I think EBITDA per patient per bed is a better number, and that is what we sort of focus on.
Okay, and also oncology is actually a big focus for you, and you have been investing in this segment as well. Now, my question is that the key growth opportunity in oncology that you are seeing, and what kind of expectation you have from this segment in terms of addition to your hospital revenue. So technically for next maybe 2 to 3 years, where are you seeing this segment going forward?
I think the growth in oncology is significantly higher than growth in other specialities, and as you see awareness of this, more testing, more and more patients wanting to treat it at the earliest, etc. These numbers are we expect these numbers to grow, unfortunately. But yes, I think as awareness and the incidence of cancer increases in our country and all over the world, we see both domestic and medical tourism sort of contributing to higher growth in oncology compared to even other specialties.
And also on the international patients, if you see, I would like to understand the growth maybe for this quarter and for the full year FY24, if you could break down for us into volume and realization growth.
So it's about 9% of our revenues effectively come from international medical tourism, which essentially means 6% of our total bed strength is contributing to it. This, of course, being higher ARPOB business than usual, generates more revenue. So 6% beds generate 9% revenues. And this has been growing at a 20+% through the year. This quarter again to the 14% plus growth that we had for the particular quarter. This is on account of certain markets, there's lumpy business because of Eid and some of the other things, etc. But we expect good traction and good growth, similar to what has been in the past few years in this business, in this line.
All right, thanks for tuning into Talking Point. I'm your host, Niraj Shah, and our guest today in our studio on a very special day, a very special guest, Devina Mehra, founder and chairperson and MD First Global. Devina, so good having you. And on a day when the markets have scaled historic highs, you are a good omen, good mascot, whatever you call it. Thanks for being here.
Thank you, Niraj. A pleasure to be here. And I don't see the balloons and confetti, or did you have it yesterday? I don't know.
Maybe we made some attempts. Now all of it is digital. So we don't have to clean up the floor as well. It just pops up and it's gone. but honestly, Devina, is it time to do all of that, or do you think now we are kind of pricing in more than just the balloons and the confetti, maybe even the caviar?
Okay, actually, I mean, I look at markets in two cuts, and you can say 2 by 2. So one part is that the large cap versus the small cap, which we've spoken about in the past also. So I am quite comfortable on the larger side, and that too, I mean, but on the small cap side, there has been a lot of froth built in. So we have been very careful, especially any company below 5,000 crore market cap. We have now very little weightage, which in the short term, of course, hurts performance because that segment has done well. But we always manage for risk first, because investing is a loser's game. You win if you don't lose. So the first rule is not to lose. The other part is the time dimension. So you have to look at markets as 1-2 year view and the shorter term view. So 1-2 year view, I remain positive, and the reason is very simple. You had a whole decade, 2010 to 20, where you had very much below average returns. So we have this impression in our minds that equity markets give you 15-16%. That whole decade, it was 8.5, 8.8 in that kind of range, which means practically you got no returns over fixed deposit returns.
Yeah.
So, I mean, 100 rupees only became 230 rupees in 10 years. In 1980, that 100 rupees became 700 rupees in 10 years. So that's what created the room, and that's why the market is still not very much above. I mean, it's not even at the trend line, let alone being above the trend line. So the risk of a crash is limited. But on a 1-2 month basis, can there be volatility? Yes. So the way we are playing it is that we are hedged. So our PMS portfolios are hedged, but we are not in cash, because you don't want to miss out if the market goes up. On the other hand, you want to limit losses if for whatever reason there is a interim crash. So that's the way we are playing it.
That interim crash is event based, or do you reckon trend based?
It is, I mean, it is showing up on the system. So it can be event based and it can be otherwise also. But it was, I mean, we've been hedged. We were hedged in March also. And once those expired, we again put on the hedges and we